Have you ever wondered what the stock market actually does? Is it just a giant casino or the engine of our economy? In this video, I'll break down how the stock market works, why it's important, and I'll even throw in some fun examples. Because let's be real, who doesn't love a good laugh while learning about money? Stick around because I've got a surprising fact at the end that'll blow your mind. The stock market can seem like a mysterious place full of jargon and complex concepts. But at its core, it's a marketplace where buyers and sellers come together to trade shares of companies. These shares represent ownership in a company, and their prices fluctuate based on supply and demand. When you buy a share, you're essentially buying a small piece of that company. Companies use the stock market to raise money for growth and expansion. Investors buy shares hoping that the company will do well, and their shares will increase in value. But it's not always a smooth ride. The market can be volatile and unpredictable. That's why it's important to do your research and understand what you're investing in. In the end, the stock market is a powerful tool for building wealth, but it requires knowledge and patience. So, are you ready to dive into the world of stocks and shares? Let's get started and unravel the mysteries of the stock market together. By the end of this video, you'll have a clear understanding of how the stock market works and why it matters. And remember, the surprising fact at the end is something you won't want to miss. So let's dive in and explore the fascinating world of the stock market. So, what is the stock market really? Imagine a giant marketplace, but instead of selling clothes or gadgets, it's selling pieces of companies. These pieces are called stocks, and when you buy a stock, you're actually buying a tiny slice of ownership in that company. Think of it like your favorite pizza place. Let's say they decide to sell pizza shares. If you buy a slice or a share, you become a part owner. Now if the pizza place starts booming because everyone loves their pepperoni pies, your slice becomes more valuable. That's the basic idea behind the stock market. You're investing in companies you believe in, hoping they'll grow and succeed, ultimately increasing the value of your shares. But just like with any investment, there are risks involved. The stock market can be unpredictable, with prices going up and down based on various factors. Economic conditions, company performance, and even global events can impact stock prices. It's important to do your research and understand the companies you're investing in. Many investors diversify their portfolios to spread out risk. By owning shares in different companies, you can balance potential losses with gains. Remember, investing in the stock market is a long-term game. Patience and careful planning can help you navigate the ups and downs. With the right approach, you can grow your wealth and achieve your financial goals. The stock market works a lot like an auction. There are buyers and sellers all looking to trade stocks at the best possible price. When more people want to buy a particular stock than sell it, the price goes up. On the other hand, if more people are selling than buying, the price goes down. This constant tug-of-war between buyers and sellers is what makes the stock market so dynamic and unpredictable. It's like a giant dance floor, where prices are constantly shifting based on the mood and sentiment of the investors. And just like any good dance floor, the stock market needs a good DJ to keep things moving. That's where stock exchanges come in. Stock exchanges have been around for centuries, evolving from simple marketplaces to complex digital platforms. Today, they use cutting-edge technology to facilitate millions of trades every day. The opening bell signals the start of the trading day, setting the stage for the action to unfold. Throughout the day, prices fluctuate based on news, economic data, and investor sentiment. Financial news and analysis play a crucial role in shaping market movements. Successful trades can lead to significant profits, while poor decisions can result in losses. The market's volatility means that fortunes can change in an instant. For long-term investors, it's important to stay informed and make decisions based on thorough analysis. With the right strategy, the stock market can be a powerful tool for building wealth over time. Ultimately, the stock market is a reflection of the economy, driven by the collective actions of millions of investors. As the closing bell rings, another day of trading comes to an end, but the market's impact continues to resonate. Remember our pizza place analogy? Let's say the owners decide to get a little too adventurous and introduce a pineapple-only pizza. Some people might love it, but others, like those who believe pineapple should never grace a pizza, might start selling their shares. This sudden influx of sellers could cause the price of the pizza shares to drop. That's why it's important to research companies and understand their businesses before investing. You want to make sure you're putting your money into companies you believe in for the long haul. The stock market can be a wild ride, full of ups and downs, but with a little knowledge and understanding, you can navigate it with confidence and potentially reap the rewards of investing in the future. Just like a successful pizzeria, a well-researched investment can bring satisfaction and success. Stay informed, stay patient, and remember that investing is a journey, not a sprint. With the right approach, you can enjoy the rewards of your investments over time. So, take your time, do your research, and invest wisely for a prosperous future. Now let's get into the nitty-gritty of how the stock market works. At its core, it's all about supply and demand. Imagine a popular new video game console everyone wants. If there are only a few consoles available, the price will skyrocket as people scramble to get their hands on one. The same principle applies to stocks. When a company is doing well, maybe they're launching innovative products or their profits are soaring. More people want to buy their stock. This increased demand drives the stock price up. Conversely, if a company isn't performing well, perhaps they're facing tough competition or their sales are slumping, investors might start selling their stock. This increase in supply can cause the stock price to go down. It's all a balancing act between buyers and sellers. Think of it like a farmer's market. If there's a bumper crop of tomatoes, the price drops because there's plenty to go around. But if there's a shortage, prices rise as everyone competes to get the limited supply. The stock market operates on the same basic principle. It's a dynamic environment where prices are constantly adjusting based on the latest information and investor sentiment. Understanding the law of supply and demand is crucial for anyone looking to navigate the stock market successfully. It's a fundamental concept that drives not just the stock market, but the entire economy. So, next time you see stock prices fluctuating, remember it's all about supply and demand. But who keeps track of all this buying and selling? That's where stock exchanges come in. Think of them as the referees of the stock market, ensuring everything runs smoothly and fairly. They provide a platform where buyers and sellers can connect and trade stocks electronically. Some of the most famous stock exchanges include the New York Stock Exchange, the NASDAQ, home to many tech companies, and the Toronto Stock Exchange for our Canadian friends. These exchanges have strict rules and regulations to prevent fraud and maintain order in the market. Just like a referee enforces the rules of a game, stock exchanges ensure fair trading practices and provide a level playing field for all investors. They also track stock prices, trading volumes, and other essential market data, giving investors a clear picture of what's happening. The opening and closing bells mark the start and end of the trading day, signaling the rhythm of the market. During trading hours, the floor is a hive of activity, with traders making rapid decisions based on market movements. Over the years, stock exchanges have evolved, embracing technology to make trading more efficient and accessible. Today, stock exchanges around the world are interconnected, allowing for global trading and investment opportunities. Investors rely on the data and transparency provided by these exchanges to make informed decisions. As the trading day ends, the closing bell signals the end of another chapter in the dynamic world of the stock market. Now let's talk numbers. The sheer volume of money traded on stock exchanges daily is mind-boggling. For example, the NYSE alone trades trillions of dollars worth of stocks each year. That's enough to buy everyone on Earth a whole lot of pizza. Speaking of pizza, remember our pizza place analogy? Imagine if the stock market had a customer service line. Press 1 if you've lost all your money on pineapple pizza futures. Press 2 if you're blaming Elon Musk for your stock portfolio's performance. Okay, maybe that's a bit of a stretch, but you get the point. The stock market can be a wild and unpredictable place, and it's important to approach it with a healthy dose of humor and perspective. But don't let the volatility scare you away. Understanding the basics of supply and demand, the role of stock exchanges, and the sheer scale of the market can empower you to make informed investment decisions. So, whether you're a seasoned investor or just starting out, remember to stay informed, stay patient, and keep a sense of humor. Because in the world of stocks, anything can happen. And that's what makes it so exciting. Okay, so we've covered the basics of how the stock market works. But you might be wondering, why should I even care? I'm not some Wall Street hotshot. Here's the thing. The stock market isn't just about making a quick buck, though that's always nice. It plays a vital role in the health and growth of our entire economy. Think of it like this. Companies need money to fuel their operations, develop new products, and expand into new markets. The stock market provides a way for them to raise that capital by selling shares to investors like you and me. When you invest in a company through the stock market, you're not just hoping its stock price goes up, You're becoming a tiny part of its success story. You're providing the fuel for innovation, job creation, and economic growth that benefits us all. But the stock market's impact goes far beyond individual companies. It's also deeply intertwined with your personal financial well-being, even if you've never bought a single stock in your life. How, you ask? Well, remember those retirement savings you've been diligently putting away? Chances are, a good portion of that money is invested in the stock market. Pension funds, mutual funds, and even your trusty 401k often hold stocks as part of their investment strategy. This means that as the stock market grows, so does the potential for your retirement nest egg to grow along with it. Of course, the stock market can be volatile and there's always the risk of losing money. But over the long term, it has historically trended upwards, providing investors with the potential for growth and helping to build a more robust and resilient economy for everyone. It's like a giant dance party where your money is secretly cutting a rug with the global economy. And while the music might stop and start occasionally, over time, the beat goes on. Most people think of the stock market as a place to buy low, sell high, and hopefully make a profit. And while that's certainly part of it, it's only scratching the surface of what the stock market can do. The real power of the stock market lies in its ability to create lasting wealth, not just quick wins. It's about playing the long game, riding out the inevitable ups and downs, and letting your money work for you over time. Think of it like planting a seed. It takes time, patience, and nurturing for that seed to grow into a strong, healthy tree. The same goes for investing in the stock market. Here's the surprising fact. The stock market is unbelievably good at making money over the long haul. We're talking decades, not days. Let's look at the S&P 500, a group of 500 of the biggest US companies. It's like a VIP club for stocks. Over the past century, the S&P 500 has returned an average of about 10% per year. Think about that for a second. That means if you invested $1,000 back in 1928, around the time Mickey Mouse was first drawn, it could be worth over $500,000 today. Now I know what you're thinking, but Jim, the stock market crashes. What about those times? You're right, there have been crashes, recessions, even depressions, but guess what? The market has always bounced back, eventually reaching new highs. So there you have it, the stock market demystified. It's not a magical money-making machine, nor is it a rigged casino designed to fleece the unsuspecting. It's a complex, dynamic ecosystem that plays a vital role in our global economy, and it offers individuals a powerful tool for building long-term wealth. Remember those feelings of excitement, confusion, and maybe even fear we talked about at the beginning? Hopefully by now, they've been replaced with a sense of understanding, empowerment, and maybe even a little bit of excitement to get started on your own investing journey. The stock market can be intimidating, but it doesn't have to be. Armed with knowledge, patience, and a long-term perspective, you can navigate this exciting world with confidence, making informed decisions that align with your financial goals.